What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put any amount of money in that brokerage account. They're going to give you up to 12 free stocks for just trying out the brokerage app. Those 12 free stocks will be worth up to $30,600. There's a link down in the description box of the video. Go click on that Webull link. Open up your new Webull account today. Go get that free stock. Go get that free money. The March CPI report came out today. And I must say, we got some good news. And I'm going to share with you that good news. But for those of you who don't know what the CPI report is, CPI stands for Consumer Price Index. And the Consumer Price Index just measures the cost of our goods and services in our economy. When prices go up sharply, inflation goes up. When prices come down sharply, inflation comes down. Now, for our economy to function properly, we should have a 2% inflation. Currently, we have 5% inflation. So that's not where we want to be. But here's the good news about the CPI report. Back in June of 2022, inflation was 9%. And as of the March 2023 CPI report, inflation is down to 5%. So certainly not at the 2% where we need it to be, but a long ways from that 9% we were at just less than 9 months ago. So very, very good progress. Some of you might say, well, why do I care about inflation? Well, you should care about it because it affects your pocketbook. It affects your wallet. The more prices go up, the more expensive it becomes to buy things. And for a lot of Americans, that expense is hurting them. That increase in cost in food, in energy, in shelter, in medical. Those things are going up, guys, when inflation is going up. When inflation is that high, at 5%, the Federal Reserve is going to continue increasing short-term interest rates in order to continue to bring down inflation. And here's what the Federal Reserve is thinking. The more we can increase short-term interest rates and make it more difficult for consumers to borrow money cheaply and spend that money on things they don't need, the better off we're going to be. So that's why they keep increasing short-term interest rates to discourage consumers from trying to go out and borrow money to buy stuff that a lot of times we really don't need. It also discourages businesses from going out and borrowing cheap money and hiring all these people and expanding too fast, and it's running up prices, right? Because we don't have enough what? Supply to meet the demand. So the Fed is going to be meeting in May of this year. They have a decision to make. Do they have enough data and enough proof that their last 9 rate hikes has brought inflation down fast enough to the point where they don't have to increase short-term interest rates anymore? That is the decision they'll have to make. I think the CPI report for March will help with that. I think it still shows evidence that inflation is coming down. Remember, like I said, 9 months ago, inflation was what? 9%. Fast forward, March 2023, it's 5%. So it's coming down. We're 3% away, guys. The kicker is, will the Fed see it that way? Will they increase short-term interest rates in May by another 25 basis points, or will they stop and allow inflation to continue coming down based on the 9 previous rate hikes? I don't think they will stop and start cutting rates. They won't do that, in my opinion, until probably the second half of 2023. I think the Fed will continue to monitor inflation, and inflation comes down, let's say in April and May, and it gets itself down to 4%, then I think the Fed will start cutting short-term interest rates in order to start trying to kind of kickstart the economy again. Now, the things that really declined based on the March 2023 CPI report, food and energy, were two of the main categories that declined in price. The housing market did not decline. It's still pretty stubborn. It's still higher than we want it to be. But here's the thing though, guys. There's not a lot of inventory out there for housing. So if people are trying to buy houses, there's not a lot of inventory. So that's going to prop up housing prices. So that'll probably one that'll lag. The housing market will soften a little bit more. Don't know how much, but it'll be a while before that happens. But at least some of our core necessities like energy and food, we can see them coming down based on what the March CPI report showed us. So that's good news. What am I going to be doing through the rest of 2023, no matter what inflation does? Guys, I'm going to be buying assets. Y'all know this channel is about getting to financial freedom. Obviously, we want to know what's going on out in the economy that can affect us, can affect our wallets, can affect our pocketbooks. We want to know that information. That's why it's good to know what's going on with the CPI report, with inflation, with the Fed. But ultimately, we still got to get to financial freedom. So I think when we're in an economy like we're in, where the stock market is up and down and volatile, I think it's an opportunity to buy assets at a discount and hold those assets. And at some point in the future, those assets grow in value and they're worth more in the future than what we originally paid for them. That's where you create net worth, and that's where you create wealth. So I think you got to still keep your eye on the prize, which is assets. Continue buying assets. Continue investing in assets. Because at some point, we're going to get out of this bear market that we're in the stock market and return to the beginning stages of a bull market. And when that happens, all of those assets you bought here at a discount during this recession, during this high inflationary times that we're in, during this turmoil in our economy, buying all these assets at a discount, you will see, in my opinion, I believe we all will see our reward in 2 to 3 years when the market starts going back the other direction, when we get in that new bull market. Now, that's my opinion, guys. You got to get out there and do your own research and come up with your own opinion and your own conclusion. But I'm telling you, that's my opinion and my conclusion. I'm going to continue buying assets no matter what happens in the stock market, no matter what happens in our economy, because I know at some point, history tells me all of this turns itself around. It always has, and it will continue to do that. My job right now is to live on less than what I make, keep my expenses low, stay out of consumer debt, and save and invest. Those are my 4 priorities, and those are the 4 priorities I would ask you guys to adapt as well. If you want them 12 free stocks from Webull, click on that link down in the description box. Open up that new Webull account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.